So good morning, everyone. My name is Patrick Sullivan, and I'm the CEO of the Halifax Chamber of Commerce, and I'd like to welcome you all to today's webinar with the Canadian Deposit Insurance Corporation, or CDIC. I see we have a number of folks on the line, some names I recognize, bankers, regular people, lots of folks who would be interested in what CDIC does. A little bit about the Halifax Chamber. The Halifax Chamber supports and promotes economic growth in our region by providing our members with the services they need and, of course, advocating on their behalf. And we have over 1,750 members, and we are a powerful voice for the business community. Before we launch into our event today, I do want to note that today has been designated a National Day of Observance for Canadians who unfortunately passed away of COVID-19. So as we're roughly a year into COVID-19, and certainly I think it's the day that it was declared an international pandemic. Sadly, we're observing the number of Canadians that have passed away. And during the pandemic, of course, most businesses had a number of concerns. One major concern was financial stability. And on a national level, the CDIC makes our financial system resilient to failure. They support financial stability and in turn support economic growth. We're looking forward to hearing from CDIC today on how we can restore confidence in our country's economic growth amid the COVID-19 pandemic. And I'd like to thank everyone who submitted questions for our presenter. When we get to the Q&A, please feel free to stick your questions in the Q&A. I'm pointing at my screen. In the Q&A or in the chat. The Q&A is better, but you can also put things in the chat. Our guest today is Peter Routledge, President and CEO. I should get that right, and CEO of the CDIC. Peter was appointed President and Chief Executive Officer of the Canada Deposit Insurance Corporation in November 2018. Mr. Routledge leads CDIC's team in more than 140 professionals from a variety of disciplines whose work supports the corporation's vision to earn the trust of Canadians as a global leader in deposit insurance and resolution. Mr. Routledge has extensive experience in Canada's financial sector. Prior to joining CDIC, he was a senior advisor at the Department of Finance, where he provided advice on a range of policy issues, including financial stability, housing finance, and competition in Canadian financial services. Housing finance, that's certainly an interesting topic these days. So welcome, Peter, and thank you very much for joining us. I'll turn it over to you for you to provide us with a presentation, and then we'll jump into the Q&A.
Okay, good morning, everyone, and thank you, Patrick, for that kind introduction. I'm honored to have been invited to speak with all of you today. And I'd like to thank the Halifax Chamber of Commerce for the opportunity. I'd also like to begin by acknowledging that I am speaking from CDIC's offices in Ottawa to each of you. And our offices rest on the traditional unceded territory of the Algonquin Anishinaabe people. And I thank all the generations who have taken care of this land. As Patrick mentioned, today is a solemn day in Canada, a National Day of Observance. The day we honor more than 22,300 Canadians, and of that 65 Nova Scotians who lost their lives to COVID-19, a terrible disease. I know the family and friends who mourn those whom we have lost are in our hearts today. And we also express our profound gratitude to our fellow Canadians who have worked on the front lines of this crisis in hospitals and grocery stores and food banks and restaurants and schools, to name but a few. I'd also like to take a moment just to salute the resilience of Nova Scotia's companies and the broader business community. The health and economic impact of COVID-19 has placed an enormous burden on your firms, as well as on the local and national global economy and financial system. As the Bank of Canada noted in yesterday's policy rate announcement, Canada's economy is proving to be more resilient than anticipated to the second wave of the virus and the associated containment measures. Noting that rising commodity prices and rising foreign demand have brightened Canada's economic prospects. So let's hang in there. Better days are just on the come. There still remains a great deal of uncertainty about the evolution of the virus and the return to economic normalcy and growth. Canada's economic recovery will rest in part on the strong foundation of a resilient financial system. My corporation, the Canada Deposit Insurance Corporation, plays an important role in maintaining the system's health and resiliency. Let me say a few words about Canada's resilient financial system. We generally don't give much thought to it because it works so well, but it underpins all of our financial transactions and therefore economic activity. It encompasses everything from banks and credit unions to payment and settlement systems between financial institutions to insurance companies. It facilitates the flow of capital from banks to businesses, sellers to buyers, and employers to workers. It is a seamless web of connections vital to the smooth functioning and growth of Canada's economy. Halifax has a notable place in the history of the Canadian financial system. Think of the Bank of Nova Scotia, which was established in your city in 1832 in John Roman's building at the corner of Duke and Granville Streets. For the next 188 years, without fail, through world wars and financial crises, it paid dividends to its shareholders and interest to its depositors. And it certainly wasn't alone amongst Canadian banks in doing that. Well, Scotiabank did this while growing a huge national and international footprint. It is one of the biggest players in Canada's banking system, an industry which provides tens of thousands of jobs to Canadians. But one of Scotiabank's competitors, one of your province's most illustrious citizens, the financier and philanthropist Isaac Walton Killam, got his start as a junior clerk at the Yarmouth branch of the Union Bank of Halifax in 1903. Royal Bank of Canada acquired the Union Bank of Halifax 7 years later. Now, CDIC is a much younger institution. We were born in 1967. The federal government's response to financial instability at certain provincial deposit-taking institutions. Today, we are still responsible for protecting one critical part of the Canadian financial system, and that is the federal deposit-taking sector. So why is CDIC so important to Canada's financial system and to Canadians? For those Canadians who have deposits in one of CDIC's 85 member financial institutions, we protect them from losses on we protect them from losses on eligible deposits. Losses that might arise due to the very rare outcome of one of our members failing. By protecting Canadians from losses up to a specified limit, we lower the risks of holding deposits, and in so doing, lower the cost of financing those instruments in the Canadian banking system. For those deposits, fund mortgages and loans to businesses and consumers. Let me be clear, we protect Canadian deposits from the risk of loss on their, We do not protect lenders. That is the job of our members' boards of directors. Parliament charges CDIC with making sure that Canadians have access to their money in their accounts in each of our member banks, federally regulated credit unions, or loan and trust companies should they fail. We insure the accounts of individual Canadians against losses from the failure of individual financial institutions. Lenders can then pass on the benefits of the savings from that reduced risk to borrowers in the form of lower borrowing rates than would otherwise be the case if CDIC did not exist. Today, CDIC protects just under $1 trillion of deposits in our member institutions across Canada. In fact, by virtue of the design of our deposit insurance product, virtually all Canadians, roughly 98%, whose deposits are held by CDIC member institutions, have those deposits protected in full by CDIC. Here in Nova Scotia, we estimate more than 90% of Nova Scotian deposits are held by CDIC members and are therefore insured by CDIC. The remainder are deposits held by provincial credit unions, which are protected by the Nova Scotia Deposit Guarantee Corporation. Since our establishment in 1967, CDIC has handled the failure of 43 member institutions, directly affecting more than 2 million Canadians. And in so doing, we've protected more than $26 billion in deposits from loss. No Canadian has lost a single dollar of deposits under CDIC's insurance protection. I'd like to take the rest of my talk just to tell you about how we provide that protection. First, by outlining the responsibilities assigned to CDIC by Parliament, and second, by explaining how CDIC fulfills those responsibilities. Let's start with our responsibilities. Parliament has assigned CDIC 4 key responsibilities through our founding act, the CDIC Act. The first one is we protect depositors. By that, we insure up to $100,000 in accounts in your name. Could be checking account, savings account, a foreign currency account, as well as term deposits. We also cover up to $100,000 for funds in each of your RRSP, RRIF, TSFA, trust, and joint accounts. A joint account would be, for example, between you and your partner. Next year, we will include new categories of deposits held in registered education savings plans and registered disabilities plans. Key thing to note is each of those categories I mentioned, we provide insurance separately for each category. So as of today, in theory, at your member institution, if you deposit with a CDIC member institution, you could have up to $700,000 under CDIC protection. Number two, it's our second responsibility assigned to us by province. That is to promote financial stability. So whatever act we might take in pursuit of our first object, we have to have an eye on promoting financial stability. The third one's the most interesting responsibility. And the third one calls on CDIC to do those first two things, protect deposits and promote financial stability, in such a manner that minimizes CDIC's exposure to loss. What Parliament is saying is, do those first two things, but don't absorb losses that should be borne by private sector players. And I'm going to talk about that in a minute, because although that sounds like a pretty clear black and white line, it isn't. It's a line of grays, or rather, it's a spectrum of light gray all the way over to dark gray. The fourth responsibility we have in Parliament is to act as resolution authority for our members. That means if one of our members fails, we have to resolve or wind it up. And that fourth responsibility opens up powers for CDIC to use in pursuit of resolving a failing institution in an orderly manner. Many people who know about us think that if their bank is failing our job, let me restart that. Many people who know about us believe that our job is to take a failed bank, close it down, pay the insured deposit claim on the insured deposits. But that act, closing down a bank and liquidating its assets and paying out depositors, is just one of the tools we have available to us. In certain circumstances, it may be smarter for us not to pay people out, but to provide them continuing access to their deposits via another method, one which still protects depositors and also promotes financial stabilities, all in a manner that lowers CDIC's exposure to loss. This highlights an important and intended tension in our assigned responsibilities. The tension between protecting depositors and promoting financial stability on the one hand, and avoiding what we call moral hazard on the other. Now, moral hazard is a popular word, but I find it helpful just to remind myself periodically of what we mean by that. Moral hazard is a situation in which one party engages in a risky deal or fails to act in good faith because it knows another party bears the economic consequences of their behavior. Anytime a party does not have to suffer the full economic consequences of a risk, moral hazard can occur. Therefore, we don't want our member institutions to take reckless risks in the belief that CDIC will eventually bear the financial losses produced by that recklessness. Put differently, we risk moral hazard in our zeal to promote financial stability, and we risk financial instability if we focus too much on avoiding moral hazard. Parliament asks CDIC to balance the tension between the avoidance of moral hazard and the promotion of financial stability. And CDIC's power in pursuing this balance is checked, as it should be, given the immense powers in our Act, checked by our board of directors, by our minister, the governor and council, and ultimately Parliament. Put more succinctly, the principle of accountability is central to Canada's system of democratic governance. And so CDIC is accountable for its decisions to Parliament through the Minister of Finance. Now I've talked about our responsibilities. Let's talk about how we go about fulfilling them. How do we intervene in our deposit-taking system in the rare but necessary circumstances when our members get into trouble? First, what I'd like to do is just talk about what we do very, very early on when in the normal course of our operations. And then next, I'll talk about if things turn south for a member or a group of members, what do we do? So in good times, in peacetime, first thing we do to prepare for wartime is we do something called resolution planning. So what's that? In peacetime, we plan what we would do if a bank would have to be wound up. And resolution planning helps us produce a well-defined plan and process to facilitate that outcome. In coordination with CDIC, Canada's 6 largest banks, or systemically important banks, have developed and now have detailed resolution plans in place. That's been going on for about 4 years. Over the last 18 months, we've turned our focus toward developing resolution plans with smaller institutions. So the planning gives us an early ability to look into a situation with great uncertainty and at least begin the exercise of thinking about how we would limit the damage from a fairly adverse outcome of a failed CDIC member institution. How else do we think in wartime about how to lower those costs? Well, we simulate failures. Resolution plans on paper simply aren't enough. We must apply those plans in a real-world setting to truly understand their effectiveness. So we routinely conduct war games to play out potential financial crises in a safe environment. And we hold a number of these war games each year of differing size and complexity. We do it for ourselves. We do it with our board of directors. We do it with our partners in the federal financial safety net. Third thing we do in peacetime, we have the authority, and this is sort of where peacetime starts to meld into wartime. So the third thing we can do is we have the authority to conduct in-depth examinations of our member financial institutions. We can assess the assets and liabilities of those institutions whose financial condition is giving us cause for concern. Through these exams, we can anticipate problems and respond sooner to a potential failure before too much value and capital are lost. In addition, the mere act of conducting these exams sends a very powerful message to the executives and boards of directors of these institutions. If we conclude that a deposit-taking institution is in financial distress, we must walk a fine line between acting too early or acting too late. And here's where we start to get into wartime. In wartime, acting too early can lead to moral hazard, which I spoke about a few minutes ago. Alternatively, responding too late could trigger financial contagion, a loss of public confidence in the deposit-taking system that could destabilize the financial system and result in much higher costs both to CDIC and to Canada. So how do we balance those two? How do we balance that tension? How do we manage that tension? A good rule of thumb for us for thinking about how to promote financial stability while minimizing our moral hazard risk, a good rule of thumb for that is that shareholders and other capital providers should lose everything in a member institution failure before CDIC and other senior creditors lose a dollar. If we need to intervene, we have a number of tools we can use to resolve a financial institution in trouble. Before we do so, we must determine how troubled an institution is. For our purposes, there are basically two states of the world for a troubled institution. First, the member is unwell, but still viable. State of the world number two, the member is determined to be non-viable by the superintendent of financial institutions. And here I do want to stress, we don't determine viability. For that, we rely on the good judgment of our colleagues at the Office of the Superintendent of Financial Institutions. If the troubled member is unwell but viable, we have an array of tools available to us via the CDIC Act, including but not limited to guarantees, loans, recapitalization, and loss sharing arrangements with the buyers of failing institutions. We can deploy whatever tool we consider appropriate, provided any action we take is in accord with our responsibilities. Those four responsibilities I spoke of earlier bind our use of these tools. And our board of directors, on behalf of the Minister of Finance, ensures our fidelity to these four responsibilities. Now, that's if the institution is unwell. If the institution has failed, different powers open up to CDIC. And again, if an institution has failed, the trigger event would be the determination of non-viability by the superintendent. That kicks off the second array of options or tools we can use to manage in that situation. And there's several of them. Four I'm going to mention. First thing we could do with a non-viable or failed member financial institution is to force or assist in the sale of that failing institution by helping a healthy buyer acquire the assets and perhaps some of the deposits or liabilities. For example, we might cover losses over 5 years up to a fixed maximum on any of the loans that the healthy purchasing bank took on. We could do this to minimize our risk of loss on insured deposits. We wouldn't be obliged to hand any money over upfront, and there is the possibility that those loans could perform reasonably well and we could end up not having to cover any losses. Second thing we could do is establish something called a temporary bridge bank. It's basically a new bank. And we would transfer to this new bank all the healthy assets and certain liabilities, for example, deposits, and liquidate what is left behind in the old bank. CDIC would hold the shares in the bridge bank, but it would be operated by a board of directors and management team with expertise in running a bank until it could be sold to the private sector. For very large or systemically important banks, and this is our fourth tool, and this would be the 6 large systemically important banks in Canada, who provide services that are vital to our economy and our financial system. We would recapitalize the failed systemically important bank by converting its capital and certain debt instruments, crucially not deposits, into common equity. That would be an effective recapitalization. Last resort, we could execute a payout and liquidation of the failed member institution. In other words, we could reimburse all insured deposits immediately, and then over time, liquidate the institution's assets. In that case, insured depositors get 100% of their deposits back quite quickly, and then CDIC steps in their shoes in the liquidation process and absorbs the losses. As I mentioned, history has taught us that although we run the risk of moral hazard by intervening too soon, early actions tend to limit losses and the risk of financial institution. In our history, 24 of our 43 member failures involved payouts and liquidations, and those tended to be more expensive than other forms of resolution. Of course, just protecting deposits is not enough. Deposit insurance only works if people know it exists, that CDIC will make good on the promise, and believe that CDIC will make good on the promise to protect their deposits. Our research has shown that informing Canadians about CDIC deposit protection helps keep the financial system safe and stable. In fact, the probability that depositors will panic and cause a run on a bank or other financial institution increases rather substantially if they are not aware that deposit protection exists and is there to protect them. That's why we spend about $6 million to $7 million annually on public awareness programs to promote confidence in the system. You may have seen our TV ads while watching morning shows or basketball games, or spotted our logo on the field during a CFL game last season, now when we still had live games. We reach out daily through our social media channels and work with bloggers and finance influencers on a regular basis to ensure that our message is heard. Not only does public awareness provide Canadians with vital information about protecting their money, but it also helps build trust in their financial institutions. If you bank with one of CDIC's members, you'll have seen our purple lock. I'll step back for a minute, and I'm wearing that purple lock here on your financial institution website, mobile banking app, or branch door. And if you see that purple lock, CDIC's got you covered. So in conclusion, no deposit-taking institution has failed in Canada in 25 years. The last one was in 1996. It was the Security Home Mortgage Corporation in Calgary. So that says a lot about the health and resilience of our financial system. But we can't afford at CDIC, certainly at CDIC, we can't afford to be complacent. With this pandemic, Canada's business and financial sector are facing the most profound set of challenges since the global financial crisis, 2007 through 8. The economic recovery from the pandemic may well be volatile, but in this time of financial uncertainty, Canadians can rest assured that CDIC has the strategies and toolkits to protect depositors and promote the confidence necessary to ensure the financial sector remains a key economic driver. So thanks very much for spending time with me, and I'd be happy to take your questions.
All right, Peter, there we go. Thank you very much. That was actually very, very informative. I had no idea. I must admit, I sort of always thought of CDIC as a slightly different insurance company. So if there was an issue, I could just write and you'd send me a check for $100,000. Of course, if I had $100,000 in the bank. I didn't realize the breadth, I suppose, of CDIC in kind of taking a look at the entire financial system, at looking at the banks and financial institutions, the comment that you made about war games, and sort of gaming out these things. I guess I really had no idea. Let me ask you about war games.
Yeah.
Did you foresee a pandemic?
Absolutely not. That's one of the unknown unknowns in our risk environment. You have sort of known unknowns. So what's the impact of climate change on our member institutions? And then you have unknown unknowns, and pandemic would have fallen into that. And it's interesting. And I talked a lot about our public awareness, and maybe I'll give you a little color behind how we responded immediately to the pandemic. It was literally a year ago today, we started to we shut down our offices because we were worried about the virus spreading. And shortly, a week or two thereafter, some of our crisis indicators, our social media trackers, calls into our help desk, and then anecdotal reports from some of our members indicated to us people were really scared, scared about their savings, scared about their finances. And it wasn't at a fever peak in the mainstream media, but our warning lights were going off. And so what we did, starting really in late March, is quadruple our presence in both mainstream and social media channels. So we went from advertising every other week to advertising every week And then every week we doubled our targeted impressions. And so you may have noticed you saw us a little bit more frequently early on in the pandemic. There's a specific reason. We needed to remind Canadians that they were safe and they were covered, and that the safest place for their deposits, if they banked with a federal CDIC member institution, was in that federal CDIC member institution. And by July, things had settled down. Now, our advertising was a part of it. Equally, and I shouldn't even say equally, far more important were the actions taken by both the Bank of Canada in terms of monetary policy stimulus, and then the federal government in terms of fiscal policy stimulus. That really, they really brought out heavy resources to quell the immediate shock, and that worked. And it worked better than even we expected. And I think you see the benefits of that today in an economy that's recovering better than I think certainly I expected and many others expected.
So you mentioned in your talk, and maybe I was just blissfully unaware of this, and I know, obviously, based on everything you've just said, we should have confidence in Canada's financial system. So, so I want to state that up front. But
Yeah.
You did mention that there have been failures.
Yeah.
And I think you said 24 of 43 failures. I mean, I guess I had no idea. And the fact that I have no idea probably speaks to the success of CDIC.
Yeah. So yeah, we've had 43 failures in our history. 24 we've done payout.
Okay.
And so the other 19 would have been non-payout. So it would have been a loss sharing agreement, perhaps an injection of liquidity or capital to help a healthy or a unwell member get through a period of unwellness and into better times. What we've learned from history is member failures don't come sort of predictably or in steady stream. They come in clumps, and the vast majority of those 43 I mentioned occurred between about 1985 and 1996. And we haven't had them since 1996. So what keeps me up at night is if a member institution fails on my watch as CEO, that's the first time in a quarter century. And so that's why we've really innovated in the last 2 years around this wargaming. We can't learn from actual experience. In one sense, it's a good thing. We haven't had bank failures, but we have to simulate that experience so we're ready to go when we need to. So what's a good I'm a firehouse captain. What's a good firehouse captain do when he or she hasn't had a fire in the neighborhood for a few years? You just drill, you do a war game. You pretend a house is on fire and you do an exercise to put it out. What's the other thing a good firehouse captain does? He calls up other firehouses in the neighborhood who have put out fires, and he says, "Hey, what can you teach me about what you've learned from that experience?" And so we make pretty aggressive efforts to talk to our friends in the deposit insurance global community, the U.S. Federal Deposit Insurance Corporation in Washington have been real good help to us in teaching us from their experience. And they've had over 500 failures in the last 20 years.
Right. Yeah, I was going to say they probably had lots of experience with failure,
which we are very, very happy to learn from.
Right, exactly, and not experience.
Yeah.
So we did get a question from Albert and Kelvin, and the question is: speaking of the U.S., does CDIC insure U.S. dollars or only Canadian dollars if they're in I expect a Canadian financial institution?
So last year, an amendment to our act came into force that changed our deposit insurance rules. So now CDIC covers deposits made in Canada in Canadian currency or any other currency. So you have a US dollar account and you're under the 100,000 threshold in the particular deposit category, it's covered. It's covered at the exchange rate. So the way I think about that is, if you had 10,000 US dollars and 10,000 Canadian dollars and two separate deposit accounts, both in your name, you'd be covered in full. So and if your institution, God forbid, failed, we'd write you, and we decided to do a payout resolution. We'd give you 10,000 for the Canadian amount, and we take the 10,000 US dollars and true it up on the exchange rate, say 13,500, and then write you a central check or one check for 23,500, and you're good.
Okay, and you kind of alluded to this, I think, again during your presentation. You indicated, and we were talking earlier, you can get multiple sort of payouts. Yeah. So maybe you could just explain, the variety of accounts, I suppose, that you could have. And I don't know if you can come up with what's the top end number if you had $100,000 in all these accounts or something.
Yeah. So say you and your partner. Say you had $80,000 in a high interest savings account in your name, $80,000 in your partner's name, and then another $80,000 account in a joint account with you and your partner. Those three $80,000 amount, totals to $240,000. You're covered 100% in full, because we cover the first 80 in your name as a separate category. We cover the 80,000 in your partner's name as a separate category. We cover the 80,000 in the joint account as a separate category. So you're covered in full. Doesn't just apply to those categories. If you had another 80,000 in an RRSP, we cover that separately. So you'd be covered fully for that. If you had another 80 in a TFSA, that would be considered a separate category. We'd cover that. And so the policy intent of Parliament has been to cover as many Canadians as possible in full at each member institution they choose to do business with. That is and the way they've pursued that intent is different from some other countries. So for example, in the United States, after the financial crisis, they just raised the aggregate coverage level from 100 to 250,000. By contrast, in Canada, Parliament multiple times has asked that question: should we go up from 100,000 to a higher level? And each time has answered, we'll do a better job of covering more Canadians if we just add categories as opposed to adding to the aggregate $100,000 limit. So that's a policy choice the government has made with that policy intent in mind. And then our job is to figure out a way to deliver on that reliably and quickly.
Okay. I want to get back to the pandemic a little bit. You mentioned that you saw some confidence return. Do you feel people are pretty confident now? I mean, do you forecast out and say, folks weren't too confident the first 3 months, then it kind of came back in July, and looking forward, people are really confident, or do you have a sense?
Maybe I'll ask it from my perspective, and I'll tell you where I think the rest of the market observers are. I'm actually a medium-term optimist. I think the next 3 to 5 months will be a little bit tough because the vaccines will be rolling in, and then it looks like the new variants of COVID-19 are kind of quite dangerous. So I think we may probably have a couple more bumps along the road. But if I look at the long-term market signals, I'm a big optimist. I mean, you look at what's happening with commodity prices. You look at how far employment has come back already. It's not come all the way back, but boy, it's really come back quite strong. And then you look at all the sustained monetary stimulus that will be in the economy for at least another couple of years, plus all the fiscal stimulus coming not only from Canada's governments, but also from for example, in the United States, they just passed the COVID relief bill this week. So, and that's $1.9 trillion of stimulus, some of which will create growth in the United States, which will help Canada out because it's our biggest export destination. So I actually am more bullish than I've been in years. And I'm just mindful that over the next couple of months, there'll be some stops and starts. Now, I'm not paid to sort of celebrate the good times. And by the way, I think that view is largely shared by markets. I think you see that kind of optimism starting to certainly flow through in the stock market, Commodity prices seem to be more recent phenomena. And so I think my view is sort of fairly close to consensus on that front. I'm not paid, though, to be an optimist. I'm paid to be a pessimist. I'm paid to think about, oh my God, what bad things could happen, and can I get ready for them, or can I help my institution get ready for them? And so, if I foresee a good times ahead, well, I know there's going to be a price to pay, or at least I have to prepare for there being a price to pay down the road. And so my thinking is will shift, I think, over the next few months to, okay, what does the aftermath of a post-COVID boom look like? How can I get my institution ready if not everyone gets through that aftermath as well as we'd like?
Right. Well, yeah, no, and I'm glad you're thinking that way, but I do share your optimism for the, I would agree with you, sort of, 4 to 5 months out. People are starting to get vaccines. In Nova Scotia, the commentary from public health is that everyone will have their first shot by the end of June, which I think is actually supposed to happen across most of Canada, and with spending in the US and some pent-up savings that people have actually been able to achieve. A number of people have been able to achieve in the last year. I think there will be some spending. We have another question, and that is CDIC for businesses only, or can individuals also benefit? I think you've touched on that, but
yeah,
go ahead.
So CDIC, the product we provide, which is deposit insurance, is a product for Canadians who choose to make their bank deposits or deposits generally at one of our member banks, credit unions, trust and loan companies. And so the product is first and foremost a product that protects individual Canadians. For certain small businesses, say with cash accounts that typically run under 100,000, our coverage will benefit them. As soon as our deposit insurance coverage, or as soon as a business gets to be of a significant size, medium-sized business, and runs cash accounts well in excess of 100,000, well, that our deposit insurance coverage stops at that 100,000 mark, and so there, presumably those institutions will keep a bit closer eye on the creditworthiness of the institutions they bank with. The notion that CDIC is a product for businesses is a bit of a distortion. We provide our product to Canadians through our member institutions. So when you go to their websites, when you go to their branches and you see the little purple lock, it looks like it's a product for those businesses. It isn't. It's direct. It is directly intended to protect Canadians first and foremost. Now, as a byproduct of that protection, Canadians are less worried about their financial institutions, less worried about the safety of their deposits, and so their deposits tend to stick at our member institutions for longer because Canadians know they're safe. The byproduct of that is those deposits are less risky forms of funding for banks, and therefore are less expensive for banks. What that allows them to do then is to transfer the benefit of that lower cost funding over to their borrowing clients. And so I would clarify that the benefit of this publicly provided deposit insurance product is first and foremost to protect Canadians, but there are positive byproducts for the financial system, including lower cost of funding as a general rule.
Okay. You mentioned federally regulated a number of times. I guess just to understand how that works provincially. So we have credit unions in Nova Scotia, as many provinces do. Is there a specific program for them that you work with or talk to, or yeah?
So every province in Canada has its own provincially regulated deposit taking system, which is provided by member-owned credit unions. In Nova Scotia, if you bank with a provincial credit union, your deposits are protected by the Nova Scotia Deposit Guarantee Corporation, which has a similar set of rules and a similar set of responsibilities as CDIC. It's just provided through the provincial government and a provincial government agency, as opposed to CDIC, which is in the federal government. But the intent of the protection is very similar. And important to note, those of us in the deposit protection business, whether we're in the federal part of it or the provincial part of it, I think there is a common value system and a common intent that we protect the same Canadians. It's very likely that, you know, folks that have deposits at provincial credit unions also have deposits at federal institutions and vice versa. Our job is to protect everyone. And so we work quietly but persistently together to make sure that whatever we do tends to help the other institution and not hurt it. And so we meet with them regularly throughout the course of the year, and we ticked up our outreach through the pandemic just so we were sure we were on the same wavelength.
Okay. And I don't want to, with this next question, I don't want to create doubt again in Canada's financial institutions, but I'm sort of asking you about those worst case scenarios. So, you know, we've seen in the past where traders have made risky bets and cost, you know, Lloyd's of London billions of dollars in bad bets. You know, if something like that, I mean, if it was an unapproved transaction of a major bank in Canada or fraud, I don't know how anybody could steal that much money, but if there was fraud, how would CDIC protect people then, or would it?
Yeah, so a couple of ways to come at that. Let's talk about the case of a fraud that destabilizes the capitalization of a large financial institution. So that has happened. Doesn't happen, thankfully, too frequently. The first line of defense against that, against fraud or any other extraordinary event damaging the capitalization of a financial institution, is build up bigger buffers. And so in Canada, you know, we had pretty good buffers in place before the financial crisis. We've more than doubled them since. And so we don't have a part. That's the Office of the Superintendent of Financial Institutions. They've built up these capital and liquidity buffers to absorb those sorts of extraordinary events. And in absorbing those, in having those buffers to absorb those events, the institution survives through that. That's the first line of defense. And the extent of cushion and resiliency today is more than double what it was 2007. That's the first line of defense. The second line of defense is, okay, it blows through, whether it's fraud or another event, it blows through those buffers. And now the institution is troubled or non-viable. Well, that's where we come in. If it's we'll start with the biggest, so the systemically important bank. If that's a systemically important bank, we have tools available to us to allow us to recapitalize that institution, and in so doing, sustain the critical services it provides to Canada's economy. Important point to remember, though, is those tools have been bought and paid for by the private sector. So there's something called contingent capital and bail-in debt that Canada's 6 largest banks issue now that are meant to transform automatically into equity if the institution is determined to be non-viable by the superintendent. That would allow CDIC under our act to recapitalize that institution relatively quickly, sustain the services it provides to Canada's economy, all in a manner that keeps the cost of doing that away from taxpayers. If it's not a systemically important bank, we always have the option of liquidation and payout, protect depositors, but that tends to be fairly disruptive, even for banks that aren't quite as big as the large 6 banks in Canada. And so when we get into that situation, we don't have as much of the contingent capital and bail-in tools available to us, but we do have other tools that would allow us to avoid a liquidation and payout if we thought that was too costly, both to CDIC and to financial stability. So, you know, the short answer is we have a lot better buffers in the system right now to absorb those sort of extraordinary events. And CDIC has a lot better tools than it has ever had if that buffer isn't enough.
Okay, well, there you go. You've inspired confidence in me. And how many of those you mentioned you have made a number of changes in the last couple of years? What changes the CDIC made in the last couple of years that have set up Canada for resiliency?
Yeah. So thanks for asking that question. Back in 2018, certain amendments to our act came into force, or sorry, were passed into law. And last year, April, certain of those amendments came into force, and a few more will come into force this year. Last year, the high points, we began to insure foreign currency deposits made in Canada at CDIC member institutions. That hadn't existed before it started last year. And we expanded eligible term deposits to beyond 5 years. So now you could go buy a 10-year term deposit, for example, that would be insured today. It wouldn't have been insured a year ago. This April, we're adding 2 categories to our insured deposit regime. The first is for RESPs, Registered Education Savings Plans. And let me be specific there. It's deposit funds within those RESPs. So if you have an equity holding in an RESP or a mutual fund holding in an RESP, CDIC doesn't protect that, but it will protect the deposits in an RESP, Registered Education Savings Plan. The other one is the Registered Disability Savings Plan. Same idea. It's a separate category, and we cover deposits within that category.
Okay. All right. Great. So we talked a little bit about what's coming next. What do you feel is needed for the path to recovery and economic growth, or is there anything needed other than some of the things that you've kind of touched on?
Well, financial stability is key, and we provide part of that. But the extraordinary liquidity and market making facilities provided by the Bank of Canada have been just hugely important to sustaining stability. And in my judgment, the fiscal stimulus also helped a great deal, helped sustain debt servicing payments through the worst part of this crisis. A little more insurance from monetary and fiscal policy sources would be helpful. Might not be necessary. It's hard to predict the future, but pretty inexpensive from my point of view, and might sort of be a very prudent insurance policy to have. The other thing is, folks, get out, get vaccinated, and get back into restaurants and stores and schools. The extent to which we get vaccines into people's arms, and people feel safe again being out in our communities, the lift from that's going to be quite extraordinary. So, I mean, I personally, I'm going to wait my turn, but as soon as my turn is up, I'm there right away.
Yeah, it's an interesting question. How long do you wait? Because they're now sort of opening things up. I had a friend in Toronto yesterday who's 61, I think, 61. Yeah. And he called me and he said, yeah, I have appointments for my wife and myself on Saturday morning. So, which is great. And frankly, everyone is going to be vaccinated with that first dose, in the next 3 months. So, we're getting past it. Did any of the government supports that were required during the pandemic, so the CEWS, the rent subsidy, did any of those have any impact on CDIC, or is CDIC just considered, we're going to continue to give CDIC what we need to ensure stability?
Yeah. Well, the impact is indirect. In my judgment, a variety of both monetary and fiscal policy stimulants in the last year sustained borrowers' ability to service debts. Right. Because debt service was sustained, credit quality in Canada's banks remained quite strong. In fact, in the last quarter, they were releasing loan loss reserves that they thought they'd have to increase a couple of months ago. So that all indicates to me that the response was quite proportionate to the shock. And therefore we avoided not all, but many of the costs of an economic shock, which are default on debt. and that had an enormous benefit for CDIC because we weren't resolving failed members because of a sudden spike in loan losses. We were wargaming. Far better that you have CDIC wargaming and not doing it for real.
Right, absolutely. And finally, I think probably our last question. I mean, what are your goals for CDIC for the next 5 years or next 10 years?
Yeah, there's a lot of them. The overwhelming one is, be ready for when it happens. Canada's not going to go into eternity with no bank failures. We're at year 25. I bet you there's when we're at year 50, I suspect the win streak will have ended somewhere along the line. So be ready for that is first and foremost, and get better and better at being ready for that. Second thing is we've launched a major upgrade to our technology platform that will enable us to pay out in more forms for Canadians who may want it electronic instead of a check mail to their house. That will enable us to more quickly know who they are if their institution fails, know how much we owe them if their institution fails, and turn those checks around as quickly as possible, or those payments around as quickly as possible if, God forbid, we have to do that. And that'll take us next 3 to 4 years, but we hope to have a system that fully allows us to maintain the quality of our product as financial services digitalizes. And then I think the other key thing for us is just to stay abreast of both the known unknowns, risks like climate that could affect our membership, risks like cyber risks that could affect our membership, and keep watchful over the unknown unknowns, the next thing like you don't see coming that might impact our system. And hopefully we can see that a little bit earlier than everyone else, so we're a little bit better prepared if something, if it causes real damage to the deposit taking system.
Great. Well, we'll rely on you to keep us all safe and well insured. So thank you very much for that. Sadly, we're out of time. I love talking about money, so I could keep going on and on and on, but we'll end it there. So thank you, Peter, and CDIC for your important work in keeping our financial system resilient, especially as we occasionally have, those unknown unknowns like pandemics that come along. Thank you to everyone for joining us today. I certainly learned a lot. I really appreciate it. I want to encourage everyone to join us on March 25th for our virtual Halifax Business Awards. Tickets are free, and you can support local businesses, as Peter mentioned, by purchasing a celebration box, which includes charcuterie and beverages from Scanway or Liquid Assets. This webinar was recorded, and we will make it available to all attendees shortly after we end the webinar on YouTube, and you can pass it on to anyone that you'd like to have view it. So thank you very much, Peter, and thank you very much, everyone, for joining us today.
Thank you, Patrick. Thank you, Halifax, and be well.
Okay. See you soon. Bye-bye. In person.
Yeah. Next time.
All right. Bye-bye.